Welcome, everybody. Good afternoon, good morning, and good evening, no matter where you are. My name is Trisha Chen. I'm a partner with CRM based in Singapore. So very much welcoming to our webinar today. Before we start, a few general house rules as presented on the screen for you to take note of. First of all, we do expect quite a large number of participants on the call. It will be great that you can also actively participate with us. There is a Q&A function at the bottom of your screen. So please feel free to send us the questions, and then we will have colleagues on the line that will facilitate that, and we will have a Q&A session to answer the questions at the end. Secondly, our webinar will be recorded for ERM's internal use purpose. And at the end, the presentation material will also be shared after we complete the webinar. Thirdly, considering this is an Asian audience, we will have the English transcript feature enabled for all of you on the call. So simply click the live transcript button at the bottom on your screen to select show subtitles. So lastly, if you have any additional questions and thoughts, we welcome for have a feedback. So at the end of the webinar, there will be a QR code for you to scan in order to provide us the comments. So thank you again, and look forward for our discussion in the next hour. So today, we will cover two main topics. First of all, I will be providing a general introduction of the report that ERM Think Tank Sustainability has published related to ESG access to the finance and then the role of CFO. And then we have an excellent group of panelists on the call today with us. And then we'll be share some discussions and then answer the questions from the audience. So with this, first allow me to kick off the webinar at the back of the report that ERM and Sustainability Institute recently published. So for those of you who are familiar with ERM, the name of Sustainability Institute shouldn't be foreign to you. So basically, this is a think tank of us that we regular public thought leadership papers, and a piece of article called Connecting ESG, Capital Markets and CFOs were published end of last year. That was with the intention through the dialogue with 15 interviews that we have conducted with a series of CFOs, treasurers, lenders, and also investors at a global level to understand how ESG risk and opportunities are now shaping the corporate strategy and also the role of sustainable finance. And we also explore a set of footprints that all of you on the call can learn and also adopt in order to be effectively navigating and thriving in this popular environment of ESG. So the publication is available at our website. You are able to go download that for your leisure reading. This webinar today is also the second one that we have done at the back of a North American EMEA audience discussion. So the intention of this sharing is to provide specific recommendations to CFOs and also corporate finance team in order to understand how integrating ESG can benefit for your finance operation and also effectively shape the company's sustainability strategy, and in order to position yourself to take the advantage of sustainable finance instruments. So moving forward in the bigger scheme of the ESG, we probably will hear this word in a day-to-day conversation. For those of you who are in the finance or in the CFO role, I believe that in most of the conversation, if not to do with investors, lenders, insurance company, the term ESG will become more and more popular. So to setting the stage, we now see there is a greater connection of ESG's performance in linking to access to capital market. As I mentioned that, there's a large number of issuers and investors now have increasingly focused on ESG issues. And in fact, from our North America webinar, one of the participants and panelists also shared that now ESG is probably integrated in all sorts of different financial sustainable finance instruments that is becoming an integral part of the capital market. And second, there is a race for us to get to net zero. And this is no longer just in the corporate world. At the back of the COP last year at Glasgow, there is a Net Zero Finance Alliance, and there's also the Net Zero Banking Association, there's Net Zero Asset Management Association. All those financial institutes are pivoting their portfolios to align with their own net zero commitments. And we see this trend picking up also tremendously, no matter with the Asian-based lenders or the Asian division of the International Banking Associations in Asia Pacific. Thirdly, there's increasing interest and also growth in the sustainable debt insurance. The data on the right-hand side presents that in 2020, we already have reached the 732.1 billion of sustainable debt insurance. And this is a record high compared to the historical data. And there is the increasing different varieties of ESG-linked loans and bonds are available in the market. And this is no longer only the green bonds, the green loans, the sustainable linked loans, but also ESG-linked hedge funds and the other instruments that are available in the market. So this is pointing to the direction that how ESG has been well integrated into the capital world. And also lastly, aside from demonstrating or claiming that one's ESG performance is to the international expectation, the data from the latest 2020 MSCI study also shows that companies with higher ESG performance in accordance by the MSCI ESG rating report would generally have a lower cost of capital and then better return in the long run. So all of those have provided enough evidence that why ESG is becoming more and more in the center spotlight of the discussion and how ESG can play a crucial role in terms of access to the capital. So the sustainability report in sum provides 4 actions that all of the individuals in the CFO role or in the finance department can take in responding to this trend. If we may move to the next slide, please. So in terms of the response, I highlighted there are 4 areas for actions that CFO and finance individual practitioners can take. The first one is to leverage a structured framework in order to identify the material ESG risk and opportunities. And in fact, this is one of the most important steps that one should consider. We come across quite a large number of conversations with Asia Pacific or global clients in asking us what should be the ESG risk that are relevant to our business and which framework should we use in order for the disclosure. I think in the ESG work, we also know that there are an alphabet soup of different organizations, rating agencies, and framework that are out there. So identifying the right framework with tools such as TCFD, SASB, and GRI will be able to assist you in understanding what would be the material ESG risk and opportunity for your organization and determine how their ESG factors may have an impact on your financial performance. Then the second thing is that I think for ESG, one of the quotes I've heard from the recent discussion with some of the other peers and individuals is that when we talk about ESG, it actually provides a door opening, eye-opening opportunity because we have to apply scenario analysis with respect to different climate risk, mainly to do with the physical climate change risk and also the transitional climate change risk. So if it's in the scenario of 2 degrees or if it's in the scenario of 1.5 degree, those will have material impact on the business strategy. So integrating the scenario analysis and different climate change scenario will help the company to shape the direction of their business planning, their finance planning, and overall communication to their stakeholders. And lastly, this is what we see the trend, not only at a global market, but also in the APAC market, that there is increasing calling for disclosure of the TCFD report. And in fact, in Asia, Hong Kong Stock Exchange and Singapore Exchange have been mandating the disclosure of the TCFD report. So if your company has not yet published a TCFD report, this is the time to advocate to be one of the produced and leading in the effort in this space as CFO. The second key response is the need to integrate material ESG risk and opportunity into corporate strategy. Reflecting my own journey as a sustainability consultant, I think it's very proud to say that the ESG topic or sustainability topic is no longer on the sideline, but very much in the central piece of tension now all the way to the C-suite. So how can we manage the material ESG topics that are most material to the company and then link to those measurements and reporting requirements using analytical rigor, the importance of data quality, the governance requirement and control as part of the financial reporting is now the key. I would say that reflecting the discussion from various clients on the market, it has come to our attention that ESG is no longer a nice to have. And then a lot of CFOs that we come across, they realize that the investors also care about ESG and they want to talk about ESG. So the successful of integrating the material ESG risk, sometimes we'll be using digital enabled toolkits in terms of the data collection will help you to present a stronger corporate strategy into accessing the finance world. The third action that can consider is to use ESG performance to be better positioned in terms of accessing various types of sustainable finance products. As I mentioned that perhaps majority, if not all of the banks will have certain data or the KPI requirement into issuing the sustainable finance product, and how the company can leverage their understanding of different sustainable finance products that are available and identifying the most suitable one and relevant to the needs can be done through the topic discussion of ESG. And in fact, there are quite some banking clients also come to us and suggest us to work with their clients in highlighting the most material ESG KPIs and setting the sustainability performance target as part of the mechanism to assist those companies to access to a green loan or sustainable loan that are relevant to their operation. And we also see there are quite a large number of discussions between different financing institutes in Asia Pacific that are engaging various lenders to identifying the energy, the decarbonization transition, the ESG transition opportunity through the engagement of sustainable finance products. So lastly, when we talk about ESG, inevitable, we talk about the disclosure requirement. Even though for now, there is no global standardized reporting requirement, but we also will advocate that the integration of financial and non-financial reporting should be combined together, and especially in the role of the CFO. It is also recommended to apply the best reporting framework, as mentioned, such as TCFD, GRI, and SASB, as part of disclosure consideration in the absence of a unified or universal reporting requirement. And when an ESG reporting baseline is developed, then you can build your case moving forward in demonstrating the performance, the improvement that you have made in the ESG transformation, while also meeting the regulatory requirement. And also, ESG reporting and disclosure has been considered as a very effective mechanism to encourage dialogues with your investors and various stakeholders in understanding how the external market or even your internal employee is considered as most important for them in your company's operation. So with this, I welcome our panelists to join me on the screen. So today, I'm very happy to share that aside from myself, we have 4 panelists joining us. So first of all, we have Simon. Simon Crow is CRM's Group CFO based in London. Good morning, Simon. Thank you for joining us.
Good morning.
Simon has over 25 years experience in both the private and public company across US, Europe, and Asia region. Simon has successful track records in corporate transaction, balance sheet building in growth, also restructuring, transition, and deal situation, and most recently in the ESG integration and financing. In fact, Simon was the co-sponsor of our sustainability report. So if you have read our report, you probably have come across his name and his face. Then the next we have Tony and Tony. Tony serves as an independent director. Hi, Tony. And the chief planning and CFO of PT Macro Energy International. Since November 2015, Tony has taken the role with PT Macro. So Tony has worked in the oil and gas industry since 1994 in a variety of positions in strategy, portfolio and risk management, business improvement, post-acquisition company integration, finance, and planning. Welcome, Tony. We also have Ben. Ben is a dear friend with CRM. He has over 20 years of experience in the energy sector in Asia Pacific. In the last 8 years, Ben has been with Societe Generale, which he leads the bank's energy finance and advisory service in Southeast Asia. Ben is rather renowned as an expert in the energy finance sector and has successfully closed loan facility totaling over $50 billion US. And Ben also has won numerous Deal of the Year awards in major financing publications. Last but not the least, please welcome Vinita. Vinita has over 14 years of executive search experience. She is with Russell Reynolds, which is also the co-sponsor of today's webinar. So Vinita has a track record in the CFO and CHRO search in the technology, healthcare, consumer industry, and also the industrial sector. Her clients including the representation from the Bombay Stock Exchange and also the National Stock Exchange listed companies in India. She also worked actively with private equity portfolio companies and also the Indian subsidiaries of the global MNCs. So thank you again and welcome the panel. Let's warm up our audience a little bit by showing up a polling question. So hopefully, for those of you who joined this webinar, either have read our report or show the interest of the topic of ESG in the CFO role or related role. So let's hear from the audience. If we can have the polling questions, please. So we want to hear from the audience that which would be the main focus of your organization this year with respect to ESG. So you can use the poll on the screen and share with us your thoughts, please. And if you remember, the 4 options is actually the 4 actions that we recommend the CFO to consider: leveraging the structure framework in identifying the material risk and opportunity, integrating material risk and into the corporate strategy, and use the ESG performance to better position in accessing sustainable finance, and lastly, ensure comprehensive disclosure. We also consider this may be different maturity that the company may see it in their ESG journey. Okay, maybe we can have the polling results show on the screen, please. Okay, thank you for participating. So 46% of the audience will say that they would like to integrate material ESG risk opportunity into their corporate strategy. That's quite interesting. That means that in a way, the recognition of ESG is inevitably being convinced at a C-suite level. And then you now see this more like how is ESG being considered as a tool, not just for accessing finance, but also into the corporate decision. It would be good to hear from the audience a little bit how you plan to do this, or what will be the challenge that you come across in doing that. But we also have quite equal or even representation from different audience in terms of the other options. Thank you for participating in our polling questions. I think this helps us quite good into setting the scene in understanding the audience interest. So let's get into our round 1 question with the panelists. So maybe Tony, I can go to you first. In the CFO role of PT Macro, in what ways do you consider ESG impacting finance across Asia Pacific in the last couple of years? And in particular, you are leading in a very strategic sector for us in APAC, which is the energy industry in Southeast Asia. What are the trends that you're seeing that you can share with us on the call today? Thank you.
Sure. Thanks, Trista. I think I'll talk about the trend that I've observed. I mean, I'm sure there are many others, but the trend I've observed, and maybe a caveat before I get into it, I think it's accelerating. Okay. The trend, I think, is best illustrated when you think about coal. So let's say 5 years ago, it's probably even, maybe even less. 5 years ago, coal financing was mainstream, if I can put it that way. And now I think it's an outlier, right? There are probably 2 sources of capital that my company accesses, banks, clearly, but also fixed income investors. And I think banks are leading the way in that trend. And again, you can see coal as the canary in the mine, if you want, if I can use a bad analogy, right? I think it's very unlikely that, well, extremely unlikely that Ben would consider financing coal in any form right now. Fixed income, I think the market is still open for the moment, but getting harder. And I can see that fossil fuels is sort of, in general, is sort of heading the same way, right? Why is that? I think it's driven by these capital providers who are being cajoled and forced, if I can put it that way, by their own regulators, their own investors, their own consumers, to be more transparent about how they're deploying their capital, right? And how that fits with climate change. And I think it starts at the beginning with negative screening, right? Where if you're in an industry or you're not adopting some of these frameworks and acknowledging these frameworks, then you can't access particular institutions. And now, even in my industry, oil and gas, if you can access an institution, you then have to compete for capital on their balance sheet, right? Are you transparent? How is your performance? Right? And then that drives you into sustainability-linked bonds and loans. So yeah, it's real. I mean, it's real, right? And I don't know, hardly a week goes by before a compliance committee member or some risk committee in a bank or a fixed income institution contacts us and wants clarification on our policies. So yeah, that's the trend I see, and it's real and it's accelerating.
Thank you, Tony. So I can say that perhaps in the last 3 to 5 years, the topic of ESG has certainly got attention for you as a CFO in the energy sector. And maybe I can
just
point
to,
you,
sorry,
yeah.
just to clarify, when we say ESG, it's sort of, it's a broad topic, right? But it's sort of shorthand for climate change. I mean, that's really what I am thinking about, right? ESG, yeah, but climate change is the underlying theme within that, I would say.
Definitely. So in the broader ESG, climate transition, decarbonization is certainly one of the key focus. So it's good to know that in your role as CFO in the energy sector, this has gotten on your attention. Maybe I can point you to another CFO on the call, Simon. Some of the clients that we work with are not necessarily in the energy or the carbon intense sector. So in your role in the consultancy service industry, do you see similar trends and challenges that you face globally? And how is the sector of consulting service industry maybe different from the oil and gas industry that Tony comes in?
Yeah, thanks. Hopefully you can hear me all right. I would completely agree with everything Tony says. I think the world has shifted materially now, and investors, regulators are demanding that firms, corporates, borrowers all follow good practice. The low carbon economy transition is here. The ESG mantra is being chanted daily. I think we see trends across the region. There's massive interest now in how climate change is impacting people's businesses, their assets, their enterprises. People are asking us every day to come in and really help them understand what these risks are, what does it mean, how can they leverage the capital markets and access finance, and how can they take advantage of the wall of money, quite frankly, that is being pushed into ESG. And in terms of assets under management, there's a huge growth, as you know, in the last few years of green funds, green bonds, green equity funds, and it's just a massive push. I think COVID may have accelerated that to some extent, as the world has sort of woken up to sort of existential risks and thought, well, maybe COVID is a practice dry run for something much more significant, which is obviously climate change and what have you. So we're getting asked a lot about how we can help companies at ERM. How can we help them look at their balance sheets, look at their risks, look at their issues, help them measure things, help them gather the data. As you mentioned, Trista, I think the regulators are getting more and more teeth now, and sooner or later there's going to be a mandated disclosure around the world, and I think the Sustainable Standards Board is doing a great job in trying to bring that disclosure and those standards together. So that's very interesting. So I suggest that the CFOs on the call watch that space. We've also, of course, seen a huge explosion in renewables as well. And again, for ERM, that's really exciting as we think about our business and helping the world's leading companies become more sustainable. There's a massive push into renewables, and you guys in APAC are really well positioned to take advantage of that, given the abundance of shall we say, sunlight and wind and what have you in APAC. So we think that's a really great opportunity for everyone to shift. So I think it's about cost of capital, it's about access to capital, it's about identifying your risks, and it's about leveraging those risks, and it's about really being proactive in terms of regulation. So it's here. It's here, and it's just going to get more and more difficult to access capital unless you're doing the right thing. I'll hand it back to you, Trista.
Thank you, Simon. You already give some tips to the CFO on the call about watching in the sustainability reporting framework space. So maybe I can ask Vinita the next question. So Vinita, you do work quite a lot with the CFOs, maybe in the Indian market or the broader global market. So in your interactions, do you see the mindset shift of CFOs becoming more aware of the needs of the ESG integration? And how are the roles of CFOs now and the finance team changing in responding to the increasing importance of the ESG factors?
Absolutely, Trista. I mean, I think in most of our interactions a year ago, the ESG topic didn't come up as much. But today, when we are talking to CFOs, it comes up all the time. I think we are seeing not only a mindset shift in the way CFOs are thinking about ESG strategy and how to integrate that into corporate strategy. The interesting part is that they are becoming the custodians of ESG strategy for their organizations. What is really happening is that, with the new sustainability related regulations coming into force, there is more and more pressure on corporations to upgrade their systems, processes, their reporting standards, and the way they are interacting with capital markets. And a lot of that gets steered by the CFO's office. Gone are the days when CFOs had to report back only on financial performance of the company. Today, a lot of the risks and values of a company are coming from non-financial metrics, which therefore also becomes the CFO's responsibility to report on. So what we are finding CFOs spending a lot of their time doing these days is identifying what that ESG issue is, which concerns their corporation. And once they identify what that challenge is, how do you then boil that down to more monetary terms, and how do you then report that back to the markets? So that's how the role of the CFO is getting increasingly impacted.
Thank you, Vinita. Good to see that you also echo some of the findings of our report, basically identifying material topics and then integrating them into the corporate strategy and collecting data and disclosure. Interesting. So Ben, I remember when I first moved to Singapore, we got connected, but it was purely talking about project finance. And APAC has been benefited long-term working with leading financial institutes in the structured finance space for energy and infrastructure development, where the social and environmental topics are pretty much essential as any bank's evaluation, especially like yourself as an EP bank, yeah? And how do you see the linkage of the same, or is it the same environmental social topics under the context of equity principle now, being connected to broader ESG topics in your conversation with your clients?
Well, I think it's important to say that equator principles, I mean, it itself has evolved, to include climate change, risk assessments, a stronger focus on biodiversity, indigenous peoples, etc. But I think, the scope of equator principles is broadened to include different financing categories, acquisition, financing, etc. But I think it is still a voluntary set of principles, and it is quite specific to the project finance market. I mean, that said, I do think that specificity and that focus has been beneficial for developing projects and project finance under the equator principles guidelines. I think that we've actually seen, better quality project development. I think we've seen environmental and social risks better evaluated and managed better by project developers. So I think, EP should be congratulated and, and lauded for that. But, as Tony mentioned, the wider ESG topic is a completely different animal. It touches some of the same areas, but it's all encompassing. It's transformational, and it's touching a much wider cross section of industry and institutions. I think also it's driven by different factors. It's driven by, it's maybe a bit more customer led. It's often enforced by regulation or law in many markets. And frankly, in the eyes of many companies, clients and customers, it's essential that the ESG topic is highlighted and focused on in order to, continue to operate and to continue to do business for companies. I think as a bank or financial institution, we have to try and make sense of that, those multiple layers of kind of ESG and ENS focus. And I think just to put it in general terms, I think where we're financing a project, obviously we're focused on the project specifics in a project finance scenario. Where we're where we review ESG matters, we're very much looking at the corporate level. What is the company saying? What is it doing? How is it disclosing its ESG performance? How is it performing on its ESG objectives? So I think, yeah, in summary, it's a multi-layered approach, and ESG much more at the kind of top corporate level.
Thank you, Ben. That indeed is what we have observed from the market. And if I may, to have Tony and Ben being focused for our round 2 discussions, when we reach out to a group of panelists, I'm very glad to see that we have Tony and Ben on the call. I know you've come across with each other, and then this is also some of the backbone industry that we have to talk about in the energy transition. And then in the topic of gas, Tony opened the conversation saying, hey, if they were still in coal, Ben probably wouldn't provide him with the loan. So in this round, the second round, we want to consider, like, is the ESG topic from the lens of the CFO, let's say in Tony's perspective, versus from the investors and lenders' perspective from Ben? How are they different, right? We all want to focus on the qualitative ESG performance. All the institutions are considering we don't want to be labeled as greenwashing, right? So from the company's perspective, they need to actively position themselves into going through the energy transition, the decarbonization transition, the ESG transition transformation. And then from the lender's part, it's also like very carefully in selecting the right project, not to add on the carbon intensity onto your balance sheet, but also want to engage with the key sectors that inevitable without financing, we will not be transformed together as a society. So with this, Tony, I want to hear from you, how is Metco's positioning yourself in managing the material risk that you have identified with respect to ESG? And then has any of the corporate decision-making been changed since that? Any specific decision or process that you have taken in your role as CFO in this discussion?
I think Metco, we need capital, right? Like all businesses out there, really, especially capital intensive industries like ourselves. We are positioning ourselves to maintain access to capital in the future. I mean, forget about each of our own responsibility to society. It's just becoming a business driver to maintain your ability to access capital. So Metco for a while has tried to position itself as a good corporate citizen on the broader ESG front. And that means transparent reporting, right? Staying ahead of not just local regulation, but best practice. For us particularly for carbon or energy transition, it means energy emissions intensity, right? That is driving our decision making more and more. But I would say that, and I think maybe Simon mentioned this earlier, good data is key. Right, you can't just wake up tomorrow and say, okay, emissions intensity is going to drive our business decision. Hey, you have to collect, you have to have good data quality, data processes, and you need third parties, right? Consultants, auditors, or reviewers to come in and advise you on industry standards on disclosure. And once you have good data, then you can begin to think, for us, capital allocation, right? In terms of what has changed or is changing. Capital allocation between fossil fuels and renewables, right, in our business. And at a more granular level, the design choices for projects, right? Do you use, is your compressor fired by what? Diesel? Gas, solar, right? The design of compressors, right? Are they more modern, smart, or slightly older designs that will be more energy inefficient? And there's pricing choices, right, to be made there. So we are positioning ourselves, as I'm sure many companies will want to, as a good corporate citizen, being transparent, not just complying with regulations, but looking at best practice, trying to be ahead of the game in order to maintain access to capital. And that is driving decisions principally around capital allocation. And then within specific projects, it's driving choices, design choices.
Thank you, Tony. So sounds like you've already integrated ESG into major decision making. And then you also have used ESG to build your strategy to differentiate from the other peers in the market. So it would be quite good to see that, let's say on the other side of the equation or conversation band, what would be the approach that the bank has taken to ensure that you've set and track the right KPIs for your sustainable finance product? And as a lender and investors, how are you interacting with CFOs like Tony in the transformation of the decarbonization journey?
Well, I think the first point would be on the strategy side. You know, in some ways, it's very similar to what Tony outlined for Medco. I mean, a bank has to choose how to position itself to stay relevant to its clients and customers and to stay relevant to the economy as it evolves around us. And so I think Societe Generale certainly made some strategic choices there on, you know, the economic development is just not viable without some changes to the way that we do business and that we manage ESG risk, for example. So I think we've made some sort of strategic choices about what we will and what we won't do in future based on what's going on in the wider economy. I think one of the things we've publicly stated we'll do is align our investment portfolios in line with the Paris Agreement to try and reach carbon neutrality by 2050. And so with that kind of commitment and with other public commitments we've made on, say, stopping coal financing, you know, one has to make some difficult choices about what sectors you want to focus on, what clients you would like to target and work with, what the likely growth in certain sectors might be. And you highlighted a very buoyant sector in sustainability linked financing and green financing, which, you know, my bank is taking full advantage of. But I think, you know, just going on to the wider question, I mean, we are seeing these ESG considerations, you know, increasingly embedded in the decision-making processes of our clients. They're embedded on our own decision-making processes on whether to on our own investment decisions. And what we're looking for really from clients such as Tony is, you know, we're looking for clear goals. We're looking for interim targets so that it's not just a distant hope that in 2050 or 2060, you know, we'll be in a different place. We're expecting, you know, clear disclosure, and you mentioned TCFD in your report, which, you know, we rely on heavily. And we're very keen to work with our clients to help, you know, get there, to define ESG risks, to benchmark against other companies in the market, to set goals, to help structure financial products which you know get towards these objectives. So yeah, I would say, unlike Tony, it's almost easier for a bank which is less about, you know, turbines and compressors and land purchase and, you know, all the issues that come with real operational projects. It's actually easier and quicker to reinvent ourselves, but I don't think I should underestimate the scale of the challenge. It's every person in our corporate and investment bank is challenged to the point where how can we integrate ESG into our business?
Yeah, I think that is the increasing demand we see from our client side, that in fact, banking client is a group of sub-asset class of the finance sector client we pick up in great demand in APAC or globally. So previously, we probably will have more on the private equity, the infrastructure fund space, but now in terms of asset management, the corporate banking, the client will come to us, even insurance companies saying that, hey, we have this corporate company group commitment. But then we can't just ditch our clients just because they are not green, right? So what do we need to do? How do we do that as a group, as a company, as an individual? But how do we work together with our client to go through the whole decarbonization, the transition? So, and then I think in Asia Pacific is more challenging because we're in the emerging market, right? So you can't not talk about the local regulations. So I think when Tony and I, when we first talked, is that the regulation in Indonesia versus the European lenders' expectation is not the same. So as a key operator in the emerging context in Southeast Asia, we have two considerations to talk about. So that is real. That is very real into day-to-day operation, making decision. If I have to make investment here and there, why do I do that? And I think it's good to see that from both sides, that ESG has now taken into facilitating some of the decision into making, investments and then capital expenditure and also the business transformation. Yeah. So some of the questions that we asked when the report first come out, our clients say, hey, why CFOs? Why is it this ESG topic explicitly to do with CFOs? What about corporate chief HR director, right? And why is it the role of corporate finance and CFO so important that ERM and Sustainability Institute publish a paper about how they're shaping the sustainability strategy and disclosure requirements. So we talk about a lot about having the right strategy, but ultimately we also see that the bigger question is that what can you do to use ESG as a storytelling to reach to your audience, which is often the investors, your customers, the stakeholders, the rating agency. So since we have quite a number of CFOs and individuals working closely with CFOs on the call, maybe I can get some thoughts from you guys. So Simon, as a CFO, how do you see ERM shape our own ESG strategy and disclosure? I know we publish our own report every year. And I also know that in the recent transaction with KKR, we actually leverage our ESG performance in accessing the sustainable finance product. So if you can share a little bit in terms of how this has been, we walk the talk and integrate it into of our own operation with ESG.
Thank you. Yes, I think there are two parts to this. So first, there's myself as a CFO at ERM. So as we've talked to, I think as Vanita mentioned, I think everything is going to land on the CFO's desk eventually. It's the natural home for the disclosure, for the reporting of non-financial information. Obviously, it's the place where we access capital. So I think increasingly the CFO is going to become more and more important as a sort of guardian. They typically have the infrastructure, the reporting. They're used to getting things right. They're used to making sure that they disclose things properly. So the disclosure is coming. So I would recommend as a CFO, and that's what we're doing at ERM. We're a private company, so the disclosures are different whether you're public or private, obviously. But get ready for it because it's coming. Line yourself up. Get the data collection mechanics ready. Get the people ready. Start educating yourself. Start educating your teams because you're going to get regulated eventually. So why not start? Why not start now? The other exciting thing as the CFO, and it really was a kind of amazing kind of light bulb moment for me in a way, is it's a win-win for the CFOs. If we've just put some ratchets in our loan agreement. KKR came and invested in us last year. We refinanced off the back of that. We've got about $900 million of debt. We refinanced off the back of that, and we put in 4 ratchets in our loan agreement. We put a ratchet in around net zero, so get closer to net zero. We get a reduction in our cost of capital. Diversity and inclusion was in there as well. We've got some very, very detailed measurements of how we're doing on that. That's really key. Health and safety, again, we work for a lot of very big industrial companies, oil and gas, mining, chemicals. That's really key for us. Make better progress internally, and we can win in terms of reduction in cost of capital. And then lastly, society. We make donations. We do good works around the world. And again, our bankers have said, if you do those 4 things and if you make progress, we will give you a reduction. So that means I get more capital to free up, to deploy, to do even more good things internally. And I can also think about offsets. If I can't quite make it to net zero, I've now got the funds to fund the offset. I can go and perhaps I can go and invest in nature-based solutions and what have you to get further to net zero. So that's me as a CFO internally. Then the really exciting thing, obviously, for ERM is that we're in the business of helping the world become more sustainable. So it's a very exciting time for us. We're 50 years old this year. And as I look at our clients, I look at their needs, we are increasingly being asked to help define their strategy, how to get to net zero, how to implement ESG, how to collect the data. We're being asked to do that, but then we're being asked to implement it. And I think we're quite unique in the world in having 7,000 subject matter experts who actually know what they're talking about, rather than just coming up with a nice glossy PowerPoint and handing it over. So a lot of the strategy houses are doing that, a lot of the big four are doing that, but actually ERM is uniquely placed. So that was a shameless advertisement for ERM, but it is appropriate. So I'm very excited about what we can do as CFOs inside ERM, but equally our business is super exciting and we're helping people on that journey. Back to you, Trista.
Thank you, Simon. Yeah, indeed. Myself as a consultant in the company, I also feel the importance of our conversation changes, right? With the M&A background, I often get invited into the C-suite for presentation. But our dear colleagues, for example, in the land, decommissioning, the safety, where we always wear the dirty safety booth, they will say, hey, why the contractors are in the room together? But now I don't think anybody would challenge to say, well, I'm actually with a ESG background to be chased out of the meeting room just because we don't wear the suit and tie. Yeah, that's thanks for sharing, Simon. It would be good to see, like, Vinita, I know you work with quite a large number of C-suites and then also recruiting into the CFO and finance function. So how do you see the role of the C-suite and finance function working together to effect the ESG integration? And how should CFOs be positioning themselves in the disclosure in the boardroom, aside from some of the other tips that the others have shared already?
Sure. No, so Trista, you're right. I think this is a very important question that is coming up in most of our conversations with our clients, right? Clients are increasingly now thinking about who they need to designate as the overarching leader of the ESG story for their organizations, right? And the reason why this debate is coming along is because ESG issues touch various functions, right? It's about how do you operate as a company, how do you operate your business? It's about how do you go to market? It's about how do you raise your financing? And what do you tell your investors? So therefore, it connects sort of marketing, operations, investor relations, finance, all of these functions, right? Now, depending on what the organization's strategy is, they are designating who will lead the ESG conversation or the ESG thinking for them. Increasingly, we are seeing organizations setting up a task force which is being led by the CFO. And the reason why the CFOs are leading the conversation is because they are the ones interfacing with investors, analysts, the external stakeholder community, right? So they are taking the leadership position, but there is a task force that is internal to the organization that is taking upon themselves to drive the ESG strategy. And that task force is very well represented by all of these functions that I just talked about. We've also seen another scenario emerge, but I have to be honest, we've seen that in much fewer situations where organizations are hiring a chief sustainability officer and the CFO and the investor relations person is taking the role as part of the task force and is responsible for the external communication. But there is another individual who is steering the debate around ESG for the organization because they don't want to take away from the time of a CFO's office. So we're seeing these two scenarios emerge, but there is a C-suite that is getting involved as part of the task force, because if you are making changes on standard corporate processes, to reflect ESG strategy, all of these functions have to have a representation. So, which is why the entire C-suite is getting involved in some shape or form. In the more evolved organizations that are taking ESG very seriously, of course, there are others that are just beginning to talk about this as well. And in terms of the boardroom debate, I think there clearly the CFO is taking the lead, right? Because the CFO is the custodian in many ways of governance, of reporting to the board on financial performance, but non-financial risks as well and opportunities. And therefore, the CFO is taking a very important position in not only telling the board the ESG thinking, but also reporting back to the board on what the organization is doing. So that's what we are seeing come through in a lot of our client conversations as well. Thank you.
And indeed, the role of sustainability has been existing, and some of the challenges we found, maybe reflecting 5 to 10, even 10 years ago, is that how a company's sustainability strategy, sustainability reporting is linking back to the day-to-day operation, because there has been the disconnection. One is more like external, one is the internal operation. But I guess the key difference we see in ESG now is so much more integrated. One cannot talk without the others. And it's so good to get the acknowledgement from you, Vinika, that the C-suite is much in the driving seat of this and driving all the changes. Thank you. So conscious of time, Tony, maybe I can go to you for one more round. So at Macro Energy, the finance team is actively participating in shaping the company's ESG disclosure and strategy. So how do you see data being best managed? We talk about the importance of the qualitative data, even in your sharing earlier, for example, the emission. But when we still do not have a global standardized reporting framework, and there is the increasing focus on the qualitative of the ESG data, how do you see this is being managed in your experience, Tony?
Yeah, I think you're right. There's no standard framework. In fact, there are multiple competing frameworks, aren't there, right? As you said, I think you called it an alphabet soup or some similar description, right? Yeah, for us, I think I touched on it earlier, we are building internal capability. I mean, maybe for us, it's a little bit easier. We're an energy industry, so it's emissions intensity. Right. But then there's a layer below that. And I won't bore people with scope 1, scope 2, scope 3, right? And whether a geothermal project, for example, qualifies, whether it's suitable for green finance or green categorization. So there are multiple nuances and how you calculate each of those. Right. In my experience, it's important to engage consultants to help you. I'm trying to think of a competitor to ERM, so I just don't mention your name, but I can't think of any at the top of my head.
Probably don't
I wish I could.
Yeah, thank you.
Yeah, right. I'm trying to think.
Good answer, Tony. Good answer.
Yeah, I'm sure they're out there. I'll Google while I'm talking. No, I'm sure you need to engage reputable consultants, right, to look at your methodology. Right, because there are multiple traps how to report, and restating is the worst thing you want to do, right? You figure out you've been reporting for 3 years and you figure out you've been doing it wrong. So getting a third party to audit, well, they don't call it audit, right? They call it assurance reviews. Because I know when Ben and similar institutions will benchmark and use your performance, they won't touch it unless it is peer reviewed, at least, right? Reviewed by, they're not going to believe your internal numbers. So you have to get expertise, because there are multiple pitfalls, and you have to have someone to coordinate, check it. Now, for forecasting, yeah, similarly, I mean, okay, scope 3, I won't go there because it's another minefield of how you develop a system to report it, right? Particularly in a highly regulated place like Indonesia. But the ones that are easier, yeah, you need to embed it in operations, right? Financial reporting is relatively easy. Your core production data relatively easy, but collecting and validating the data on, for us, emissions is not easy. So I would say don't underestimate it. And yeah, just to reiterate, the lack of standards and the multiple ESG rating agencies' views and the way they do it, yeah, it is greenwashing, or otherwise is something that you can be. You could get away with it if you wanted, frankly, right? But you will get caught out eventually. So you need the expert help to make sure you're doing it right.
Thank you, Tony. So to hear you, I think that there's 3 portions of the ESG data that we need to focus on. The first is knowing what data to collect. And second, working with experts to really validate the methodology for the data collection, make sure that what you collect are genuinely reflecting what you want to present. And then the third part is to have reliable verification, audit, or assurance business to present the data has been collected based on those accredited methodology to present to the external stakeholder. So we can't talk about data without thinking of the 3 steps. And I think now more and more companies will use the underlying digital approach to be smartly and avoiding duplicating or manual effort to make it happen. And that
probably
is
I'd add a 4th step, which is setting targets.
Yeah.
Right. Setting targets for improvement.
Yeah.
And then being transparent about performance against those targets. My experience is that institutions, I mean, oil and gas, right? No one expects it to go away tomorrow, but people expect improvement, transparency, and that you improve, not that you're perfect tomorrow, but that you improve and you set targets to improve over time. So I'd add that as a 4th step, setting improvement targets.
Thank you. Thank you, Tony. That's very helpful. We do have one question on the line. It's actually an ex-colleague of ours. Thank you, Martin, for joining. So the question is that, do we need a chief ESG officer or a dedicated ESG function in the company to better integrate and implement the ESG? Any
I noticed, Trista, I noticed you didn't mention which company he joined as an ex-colleague, just in terms of your competitors.
Not exactly.
All right, I couldn't resist.
Yeah. So Vanita did share a little bit. Maybe Vanita, do you want to chime back on Martin's question?
Oh, no, happy to. So I think it's more important to have an ESG strategy than to have a chief ESG officer, right? And I think different companies are having different approaches to this topic. There are companies who are having their CFOs drive the ESG strategy. And then there are companies who are thinking about hiring a dedicated resource to do that. But most importantly, most companies are thinking about putting together a task force that will spend a giant share of their time thinking about integrating ESG strategy with their corporate strategy. So I think the answer is different in different situations. The more important thing to do is to actively start debating this internally and putting together a task force that is going to spend some time proactively working on this topic.
Thank you, Vinita. You highlight one point that is quite crucial, and that's how I also want to close today's webinar. Reflecting the ESG journey, being in Asia Pacific, I think all of us, if we grow up in Asia, we are quite used to meeting expectations, right? We perform, we go to school, we meet expectation of the school, the parents, the society. So we are quite outcome driven. If I get there and I can go to the next step, I will be very much be able to reward. For example, if I go to university and in this school, I like to land a good job, then I will be able to get to the next step and next step. So when I think of ESG and in the whole goal transformation, this is actually very much a journey, right? Rather than the clients always ask, hey, what is the reporting framework that we should do so that we can do the disclosure? It's actually very much reflecting the panelists are sharing today that is a process that you need to have the engagement, you need to discuss, you need to consider how it makes sense to you and why, and where you want to allocate investment and capital. And then this is becoming integrated into the whole decision-making in the C-suite strategy. And even to a topic as that, hey, which department should we set up to manage ESG? Who should lead that? There is no single answer to that. And when it comes to the ESG framework, where we're waiting for the global synchronization to come up with, I know the audience on the call will also say, hey, yeah, can you tell us if there's one short answer, what would you recommend? So I'm going to just say it out loud for the benefit of the audience on the call. I would say that if it's not a listed company in the public sector, then as a private company, the most practical guideline that we think is perhaps the SASB, referencing the material consideration of different ESG topics for related with your sector. And it's also very well associated with the accounting requirement that is a financial and non-financial disclosure is linked together. But then the second standard that one should definitely start thinking is the TCFD. I think Ben already saying that in their landing discussion, they were referring to disclosure reports like including the Task Force of Financial Disclosure, TCFD, to consider how you have undertake the climate change consideration. So if the two takeaway is, if there are one standard or two that you should look into to start your ESG journey and disclosure, we will recommend you to consider the SASB and then TCFD. So with this, we thank all the panelists for the excellent debate and conversation we have today. And we also thank the participants joining us for this hour. We very much will appreciate you can send the QR code and provide us with your feedback. And we look forward to hearing from you and seeing you around the corner for the next ESG conversation. Thank you so much. Take care. Stay safe.
Thank you.
Thank you.
Thank you.